All right, if you've been following along with my little mini course here, learning how to trade dynamically and also why you should learn to trade dynamically, you now have pretty much a good understanding of what it is and how it works and what each component brings to the table as far as our trading analysis is concerned. But now that you know all this, how do you actually trade this? Hi, this is Load with Black Bear Dog Trading. As always, welcome, whether you're new or recurring. I am glad that you're here and I really appreciate you being here. That's it. How do you trade all this now? There's a lot on the chart and it may get a little overwhelming at times. Well, remember in a prior video I had indicated that we're going to simplify this so it doesn't look as, the chart doesn't look as overwhelming and makes it a little easier on the eye, and it makes it also a little easier to do our analysis. And I'll tell you why again. I'll explain why I do what I do so that you can easily understand and follow along as well. Okay, the premise of this strategy is that we check our own balance volume for either buying pressure or seller pressure. Then we check the strength of our trend, and also whether it's a downtrend or an uptrend. And then we check our actual chart by using the 100 EMA as our trend direction identifier and the 50 and 20 EMAs as crossovers in conjunction with where price is at in relationship to both EMAs, and then whether or not we would have a buy or sell opportunity. Now, as you look at this chart right here, obviously there are certain indicators at this point in time we don't need. If I were to shrink this down a bit, you'll see that whenever the 20 is below the 100, so is the 50. Whenever the 20 is above, so is the 50. And the process repeats. And every single time that's the case. Here we go. The gap may be a little, the distance between the two may be wider or closer together. But when one is below, so is the other. One is above, so is the other. So we don't need all of these indicators. So first thing we're going to do is going to get rid of the 50 EMA. Simply in MT4, what you do is you simply right click once you see the description of the EMA, you simply right click, opens up this little window, click on delete indicator, and you're done. Right there, that makes visually at least the chart a lot easier to see and analyze. Number two, we're going to modify our 20 EMA no longer as a crossover signal here or here or here, but we're going to use it for something totally different. We're going to use it as a closing parameter when we are in a trade. So we don't really need this line solid. What I like to do is, again, highlight the indicator. You see the little info box, right click in MT4, click on properties, and now we're going to change this to the thinnest line possible so that we can change the actual line itself. And I'm going to use just dots. You can set whatever color you like. Since it's dots, you might want to go a little bit of a darker color because it's not so easily visible otherwise, although it doesn't really matter that much, but nonetheless. So we'll go a little darker, and here we go. And now our chart looks exactly like this. So what is the purpose now of turning the 20 EMA in a dotted line? Well, at this point in time, the rules of our strategy are getting simplified, and the 20 EMA is no longer used as a crossover signal. It is now used as a closing signal. Let me show you what I mean before we actually see if we can do some trading here. Right here, as you can tell, price now dipped below the 100. and the ADX really confirmed that this is a solid trend, and the OBV was, while it says confirming that it's absolutely selling pressure, and the EMA, the 100 EMA, is slanting downwards. We most definitely have a 100% sell opportunity here. So at this point in time, we would have entered the sell position and we would just let this run. But now, when do you exit this trade? Well, you have two options. You can manually set your stop loss and take profit, or you don't bother with these two and you use a little bit of a simpler system. And that system is that as soon as price reverses and moves above the 20 EMA, which is what it does right here, we close the trade. We're out. That's why now the 20 EMA has become a dotted line as a guide when we should close our trade. So let's shrink this down a little bit and see if I can give you some more examples so you fully understand, fully grasp how this works. And here we have another one. This is a really nice example. By the rules of our trade, we have to check OBV is definitely buyers, ADX or super strength of the trend. Trend is most definitely up. Price is most definitely above the 100. It is a bull bar. We take this buy position and look at this go. We stay in this buy position until such time that price closes below the dotted line, which is the 20 EMA. As you could tell right here, it did not go below, it didn't close below, so we stayed in the trade. Here is where it actually did close below. And this is what we now, how we now trade and how we use our the 20 EMA to confirm buy and sell closing positions, exit positions. Let's excuse me. Let's try a sell position. It already occurred, but so you understand the logic. The OBV is definitely down, meaning seller pressure. The ADX at that point in time was definitely high, although it was reversing down, but it was still a strong trend. The trend was also the 100 EMA clearly indicating at that particular point that it was down, and price was moved here below the 100 EMA, and it was a bear bar on top of it. This was definitely a sell entry position. Had we taken that position, it would have gone very nicely here, and we simply wait without setting take profit or stop loss until price reverses, retraces, and now closes above the 20 EMA, and that's our exit signal. That's where we exit the trade. Now I already know what you're going to tell me. You're going to say, well, if I would have gone out here, I would have had a larger profit than going out right here. And my answer to you is you are absolutely correct. But when you do this day in, day out, trying to play it to the last pip is going to bite you in the butt, literally. And because you're not going to be able to absolutely catch every last pip for the same amount of money. This could have not gone down to here, and it could have reversed more in this direction, which, but you have to give and take a little bit. It is trading. It's not exact science. So you lost a little bit here, but it's not the end of the world. You had a really nice run right here. And the trading method you have, your analysis is very simple. hypothetically, let's just say that you've used a stop loss and a take profit, and you set it to a ratio of 2 to 1, which is very common. Okay, first of all, you're debating, where am I going to set my stop loss? Should I set it here? Or perhaps should I maybe move it all the way? Oops, let me put it there. Should I move? Come on now. No, you're not willing to work with me here? Or should I move it all the way up to here? That's already a debate you're going to make. If you were to set this right around here, what if you set it a little too, right here? What if you set it a little too close? Bar would have retraced and you would have been stumped out. But let's just say you set it here and you were right. In this case, bars did not retrace, price did not retrace. It continued. Now, where you're going to set your take profit. If you're going for a 2 to 1, well, here was your entry. Let me make this very clear. Your entry was right here. Okay, so the little gap that you got right here, a 2 to 1 would have meant that you would have set your take profit ratio roughly around here, more or less. Now look at the amount you would have missed if you would have done it this way, all the way up to here, because right here is where we make the close into over the 20 EMA. So you would have substantially lost, had you traded this way, you would have lost this much, far more than this much. So it's a trade-off, and you need to decide for yourself as a trader which works best for you. You know, I mean, it's just how it is. That's how trading works. And in our case, since we are dynamic trading, I prefer to wait for price to cross over or under the 20 as my exit signal, and then I simply get out of the trade. So this is now what I call the simplified version of the dynamic trading strategy. Our chart looks obviously a lot cleaner, and it's easier to spot signals and whether they're buy or sell, and it's also very easy now to spot exit points. So now the question is, how do we actually trade this? Well, you already now understand the dynamics behind it, the logic behind it. So now simply go pair by pair, and I'll show you exactly what I do. I am currently at the Euro USD 1 minute. Start at the bottom, as I can tell already because I've now done this for a long time. But the OBV is heading down, meaning sellers are starting to come into play. The ADX tells me the trend is still good, but it's starting to point downward. And right here, we're sitting at an even keel, pretty much plus 17, minus 17, and a few points. That tells me the trend is not really, right now it's just, flat, not going anywhere. And sure enough, when I look at my 100 EMA, it is flat. On top of it, price is turning down. As far as I'm concerned, this is absolutely no position to be had here. And let's just move on to the next pair. So next pair in my market watch is USD JPY. And here we go again, same concept. The OBV is, let me draw arrows so you can see that. OBV is down, we're in seller's territory. The ADX is in the 2540 zone, which is good. It's slightly pointing upwards. We are here currently definitely sitting in a downtrend. The minus DI is larger than the plus DI, substantially larger. And the ADX is in a good zone. So that's a pretty strong downtrend. And indeed, we look at our trend indicator, the 100, it is down. So now we look at price. At this point in time, price is most definitely down, but I'm sitting right here at a resistance, at a support level right here. and it seems to be a pretty strong support level. Look how many hits we got. One here, 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 and another one here. So the chances that this will actually hit support, do something like this, and then go back up like that, are pretty good. So at this point in time, I rather wait, and let's see what price will tell me. I can always come back and check this again. So I now do the same thing for the next currency pair, which is a British pound USD. And again, I'll use arrows. The OBV is heading downwards while we're in high territory right here. We are definitely gradually starting sellers to see coming in. The ADX, or the trend strength indicator, is in the 2540 zone and it's going up, which is very good. The plus DI is well below the 20 minus DI, which means we have a strong downtrend. If I look at my trend indicator, sure enough, that's pretty strong down. Price is also below the 100 EMA. And let's see if this is a bear bar. It is. So although it should be the last one, because we never trade on live data, this is a bullish bar, but it's a very small bullish bar. So at this point in time, my only thing that is holding me back is that I am too close to the support line again to validate a possible position entry. I mean, as you can tell, if this goes down to about right here, one more candle, and then will it rebound, or will it continue downward? So at this point in time, I'm just going to hold off, and I am not going to trade this as well. So rinse and repeat. Next currency pair, Australian dollar, US dollar, and let's see what we get here. By now, this is the fourth currency pair I checked, and I can tell already that no matter what everything is showing here, OBV, ADX, we are sitting at a support and resistance level. Let's wait. There's no need to check everything else, and as you see, it is hitting it. A little bit retracement, hitting it, a little bit retracement. So more than likely, this may revert all the way back to this direction. But again, this is anybody's game. No one can predict what price will do next. So no entry. We'll have to wait and see yet again. And this is how I do my analysis for every currency pair. Let's do one more. The USD CAD. Well, here we may actually somebody's dog going crazy. Sorry about that. Here we actually may, but it's a may with a big question mark, only for the same reason yet again. You see this right here? So unless price actually breaks through here, I am not going to take a position, but I am certainly keeping my eye on this one, because thus far of all the currency pairs we did analysis with, this is the closest to a potential sell position. And let me enlarge this so you can clearly see the reasons why. The sellers are definitely pressing. The ADX, while it's weak, the trend is somewhat weak, but yeah, and you can tell they're pretty much even here as well. Nonetheless, it's a little bit of it's really a flat trend, tell you the truth, I gotta be honest. But the 20 EMA is below the 100, although it's curving back upwards as well. Now that I blew this, enlarged this, and the more I look at this, no, this is actually not a trading opportunity at all. So again, now you see why you need to do every part of the analysis and not just go by only one particular point of view, because at this point in time, I would have waited anyway to because of the support level that we're clearly on. But as it looks, it also is very clear now that the market is going flat. And how long will this last? That's anybody's guess. So I'm not going to waste my time on this. There is simply no trade opportunity here as well. So let's do one last one. And I think you got the gist of New Zealand dollar, US dollar. And here we go. We're sitting at the in a weak trend. And although the minus DI is below is greater than the plus DI, the trend is somewhat weak, and OBV is flat as well. Right here you can easily tell that it's flat. This is somewhat weak. We're right at the edge of the 15, meaning it goes into flat territory. Price is also flat. It's below the 100. The 100 had a nice down run, but seems to kind of flatten out a little bit right here. Is this a position I would take? No, it's a position I'm not going to take because the signals aren't strong enough. Okay, let's do, for argument's sake, just one more, and there you go. And what do you see right off the bat? Well, kind of the same concept, right? If I were to draw my support line here, there you go. And the EMA is kind of down, but it's not very strong down. The ADX is sitting in a good zone, and the DI minus is definitely greater than the plus DI, and the OBV is slightly up. That means buyers are trying to push their way back up. So this is contradictive. And that means because of that, we have no possible entry position. Besides, I would wait anyway, whether or not price will move below support, or if it hits it once again, as it has done multiple times, and move back up. This is the whole premise of the dynamic trading strategy. As you can tell, having all the components in place, this is merely rinse and repeat for every currency pair you want to trade. Excuse me. Of course, you know, not every day will be like this. There will be days that you have multiple trading opportunities. Right now, as it stands, I have no trading opportunity. Don't sweat it. There'll be plenty of opportunities to be had still to come. Guarantee you that. So it's just stay calm, wait and see, don't force it. You got all the rules, you got entry and exit rules now, and you got everything standard for dynamic trading, and this is really the way it works. Now, is this the end of dynamic trading? No, it isn't. There is more to it than just this, but at least you can already get started. And at least now, if you practice this on a paper trading account or a demo account, at least now you know what the rules are, and you know what the components are, and you have an understanding why we use those components. You're able to explain what you're looking at. You're able to understand what you're looking at. You're well ahead of the game already. In the next video, which will I'll try to upload tomorrow, which will conclude our mini course, we will put this on yet another level. Remember, I told you I have a little surprise for you. Well, that's coming up tomorrow. This is it for today. I hope you enjoyed this information and you found it useful, and apply it to your trading, and you'll see you'll do much better. Load with Black Bear Dog Trading signing out. As always, thank you for being here. I appreciate you all, and stay safe, and God bless.